This indicator saved me thousands by doing one thing most divergence tools can't. It filters the fake signals and highlights the real divergence where smart money is actually active. By the end of this video, you're going to know exactly what every signal and label means, how to use the built-in dashboard as a safety filter, and how to execute clean long and short setups with real entries, stops, and targets. Stick around because the last pattern type I'll show you, the purple one, is something most traders have never even heard of, and it might be the most powerful of all four. Let's get into it. Here's the thing about standard divergence indicators. They're not wrong about divergence existing. They're just useless about telling you which divergence to care about. Think about it, if every swing generates a dot, you're not getting a signal. You're getting noise dressed up as a signal. And noise with a pretty color is still noise. The reason most traders lose money trading divergence isn't the concept. It's that they have zero structure around it. No wave logic. No momentum confirmation, just dots. The VUBIS divergence wave pattern generator solves this at the core level. Open TradingView, pull up any market. I'm using the 30-minute chart here, but this works across all markets and all time frames. Click Indicators, search for VUBIS divergence wave pattern generator V1, and make sure you select the one by VibDubis. There are clones out there. Get the real one. Once it loads, you'll notice something immediately different. The patterns don't appear in a separate pane below your chart. They appear directly on price. That's intentional, because this indicator is connecting divergence to the actual structure of price, where trades actually live. This indicator recognizes four distinct pattern types. Each one is based on a different geometry and a different momentum behavior. Let me introduce them one by one. Pattern number 1, the standard reversal. Green equals bullish / red equals bearish. This is your bread and butter reversal signal, but here's what separates it from random divergence. It only appears when 3 momentum peaks align with 3 price pivots, and the middle peak is weaker than the first. That's not just divergence. That's divergence with a momentum decay pattern built into it. The indicator is essentially telling you, price tried to push higher, tried again, but the engine is losing power each time. When you see this pattern, it means structure and momentum agree. That's the combination you want. Pattern number 2, the climax reversal, orange. This one's my personal favorite to watch for because it catches the traps. A climax reversal appears when momentum doesn't confirm a price move and then suddenly collapses. That's the signature of smart money exiting while retail traders are still piling in. The move looks strong, the candles look powerful, and then it just dies. Orange on your chart means someone big just left the party, and the party's about to end. Pattern number 3, the rounded top / bottom, navy or maroon. This pattern is different in character. It rolls, it doesn't spike. When price compresses and momentum decays across 4 consecutive waves, not sharp pivots, just a gradual fade, the indicator marks it as a rounded top or bottom. These are distributions or accumulations happening in slow motion. This pattern often precedes big, sustained moves because the buildup happens quietly before the breakout. If you see a rounded bottom forming with a green dashboard, pay close attention. Now, before I show you pattern number 4, which is honestly the most powerful one, I need to talk about something crucial. None of these patterns matter if your broker is feeding you bad data. Wrong spreads, manipulated price feeds, delayed execution. It all turns a perfect setup into a losing trade. Our team at BrokerCheck has spent countless hours reviewing and cataloging the top brokers so you don't have to. Use our broker comparison tool to filter and compare brokers side by side in seconds. Visit BrokerCheck at the link in the description to find the broker that actually fits your trading style. Now let's get back to the topic. Pattern number 4, the predator, purple. Now, this one is not a reversal signal. I want to be very clear about that. The predator is a trend continuation pattern. It appears when price makes a higher low in an uptrend, healthy pullback behavior, but momentum makes a lower low. That's hidden divergence. And hidden divergence in the direction of the trend is one of the most reliable signals in all of technical analysis. When purple appears in an uptrend, it means the pullback is likely done, and the trend is about to resume with force. Don't fade it, trade with it. Up in the corner of your chart, you'll see a small dashboard box. This tells you whether bulls or bears are currently stronger based on recent momentum peaks, and it is not a decoration. This dashboard is your veto system. If you see a bearish red pattern but the dashboard is strongly green, that's the indicator warning you might be trying to fade a trend that isn't finished yet. Green dashboard means buying pressure is dominant. Red means selling pressure is dominant. The rule is simple. Pattern plus dashboard alignment equals a trade worth taking. Pattern without dashboard alignment equals a pass. Don't skip this step. Most of the bad trades in divergence trading happen when people ignore context. This dashboard gives you that context in one glance. Double-click the indicator to open the settings panel. You'll see 4 main inputs: fast length, slow length, signal length, and look back. The defaults from the author, 8, 21, 5, 3, are your starting point. They're calibrated well for most markets and most timeframes. Don't over-tweak right out of the gate. A few market-specific notes worth knowing. For forex, the defaults work great on major pairs, especially during London and New York sessions when momentum is cleanest. For crypto, patterns can form and fail fast. Consider tightening look back to 2 on lower timeframes, but always wait for the full pattern to complete before touching a trigger. For stocks, stick to higher timeframes. The geometry works, but intraday noise on individual equities can be brutal. Let the pattern breathe. For gold, divergence hits hard and fast. You want strong dashboard alignment before entering. Don't take halfway signals on XAU. Here's exactly how to trade the long setup. Step 1. A green bullish reversal pattern appears and is fully drawn. The word fully drawn matters. Don't enter on a pattern in progress. Wait for the final pivot to confirm. Step 2. Check the dashboard. Green or neutral. If it's strongly red, skip it. Step 3. After the pattern completes, wait for price to form a higher low. That higher low after the pattern is your actual entry signal, not the pattern itself. Step 4. Enter long on that higher low. Place your stop below the swing low that formed during the pattern. If price breaks that level, the setup has failed, and you want out clean. Step 5. Target the next obvious swing high or resistance level. That's where other traders' stops and take profits cluster, which creates natural price reaction zones. If the dashboard flips red while you're in the trade, start tightening your stop or taking partial profits. The momentum context just changed. Shorts are the exact mirror. Fast version. Red bearish pattern, fully confirmed. Dashboard showing red or neutral. Price forms a lower high after the pattern completes. That's your entry. Stop goes above the swing high from the pattern. Targets are the next swing low or demand zone. If the dashboard flips green mid-trade, tighten and manage. Same logic, opposite direction. Most indicators will give you a signal. Very few will give you a reason for the signal. If you found this useful, drop a like. It genuinely helps more traders find this content. And if you want to see more strategies I build around tools like this, subscribe to channel and hit the bell icon. There's a lot more coming. I'll see you in the next one.